Shares of TFI International are under pressure, albeit they're bouncing back a little bit, but they're still down about 3.57% after reporting a revenue drop in the fourth quarter as the transportation firm continues to face weak demand. Here to talk more about it is Bruce Chan, Managing Director for Global Transportation at Stifel. Bruce, thanks very much for joining us.
Yeah, great. Thanks, Roger. Appreciate you having me.
A mixed report. I mean, looking back, not so bad. Looking forward, people not so happy about it.
Yeah, I think that's right. Our view is that performance in the fourth quarter actually was quite good. Results came in certainly ahead of our expectations, above the guidance midpoint. So from an operating perspective, I think the company did well. What we think, most of the pressure is on the stock today is from a first quarter guide that's materially below where the street had been pre-print.
And what's the worry about that?
Yeah, I think, right now there are a lot of prevailing concerns about what's going to happen with the demand environment. We've been, of course, in, a freight slump that's lasted about 3.5 years, which compares to, a typical freight cycle, which is maybe 18 months of its entirety. So I think there's some concerns that, some of the green shoots and positive indicators that we're seeing, maybe are not materializing. And I think that's what investors are picking up today.
And does it look, when you say they're not materializing, does it look extended? I mean, are we talking maybe the end of the year turnaround, or is it looking that it might be longer than that?
Our thought is that we actually should be seeing some good inflection in the cycle, based mostly on supply exits in the industry, but again on some building demand opportunity that should be hitting sometime around mid-year, maybe at the earliest in March into the second quarter freight peak. I think, where you're seeing the concern is that, these demand indicators are a flash in the pan, and the regulatory pressure that you're seeing on supply may ultimately not come to fruition.
And what is some of that regulatory pressure? What are some of the concerns?
Yeah, most of them have to do with U.S. Regulations. The Trump administration has made a big push against non-compliant immigrant drivers. So the big one here is the FMCSA's final ruling on non-domiciled truckers, which we anticipate could ultimately take out as much as, call it 15% of the overall for-hire over-the-road trucking market. Right now, we're expecting maybe a 4 to 5% impact this year from just that regulation alone. But you're also seeing a material crackdown on drivers that are not proficient in English language. You're seeing a crackdown on, so-called fly-by-night driving schools, as well as non-compliant electronic logging device operators.
And is there a concern with that, with TFI, Canadian, French-based issues about the language and other things?
We don't see it as being so much of a concern for TFI. Ultimately, I think this will be a benefit for TFI. They have a more rigorous vetting process than what you see with the mom and pop owner-operator carrier community, which is still the vast majority of supply in this industry. So we think that actually should be a tailwind for TFI. I think, some of the concern really has more to do with whether or not the supply crackdown ultimately materializes. But you bring up a good point with TFI's geographic mix. There is also a lot of concern for how, future talks around USMCA and the trade relationship between the U.S., Canada, and Mexico are going to develop. We have, July 1st as an upcoming kind of deadline for those renegotiations. And I think the sense is that there's some pent-up demand, not just from customers, but if you also think about, acquisition targets, the M&A environment, that is waiting for that issue to settle.
And with CUSMA, what kind of an impact might that have? We've heard talk that it might be individual deals between Canada and the U.S., Canada and Mexico. What kind of an impact might all that have? Has any of that been factored in yet, or is it still just sitting and waiting?
Yeah, I think it's mostly sitting and waiting. It's hard to say what the market has baked so far in terms of that impact. I think at this point, most investors are expecting some sort of status quo. So, any developments there to the upside obviously would be positive for valuations, obviously for the stock. But I think there's still a lot of uncertainty, which, to an extent is being factored into some of the valuations and certainly into the demand front as far as that pent up demand that I talked about.
All right. And any tailwinds or any potential tailwinds for it?
I think so. I think if we see positive resolution really on any of these, regulatory or trade initiatives, that would unlock a good measure of demand. I think that would be viewed as a favorable development.
And going in a different direction for a sec, any merger and acquisition M&As happening right now, or on the
Most of the
horizon?
outlook for M&A is for a pretty strong year in 2026. Another story of pent-up demand there, probably some of it tied to regulatory uncertainty. You've also had more of a meeting of the minds between buyers and sellers. So I think the outlook is good for M&A. From TFI's perspective, they're still positioning conservatively on the M&A front. They said that investors should expect about 200 to 300 million, but mostly focused on that small tuck-in acquisition, which up to this point has really been the company's core bread and butter. As far as larger deals, they'd probably be looking into 2027 before really considering that.
And would any of those acquisitions or mergers, would they be down in the States or are they up here? Have they alluded or hinted at it at all?
Yeah, I think at this point, our take is that they might be mostly focused on the States. I would see, as far as large scale M&A is concerned, to expect something in the LTL division in the U.S. to add, density to that network. You might also see something on the logistics front, primarily in the U.S. as well.
Okay, we'll wrap it up there, Bruce, but thanks as always for joining us.
All right. Thanks, Roger.
That's Bruce Chan, Managing Director for Global Transportation at Stifel.